Senator Audu, fixed income trader at Access Bank, tells us why. Thank you so much, Senator, for taking the time out to join us today. I'd like us to just do an overview of trading so far this week. Let's start with the money market. Talk to us about the overall performance of the money market and the liquidity levels that we saw.
Thank you. Thanks for having me. So, as you rightly said, we witnessed a largely bullish market this week. So, beginning the week, we started to see some offers across the mid to long end of the treasury bill market. That was just on Monday. But by Tuesday, in anticipation of the auction that the DMO conducted on Wednesday, we started to see that trend reverse as market participants started to buy, which spurred the bullish interest that we began to see. So by Wednesday, which was when the auction held, the DMO offered about 51 billion across the standard tenors, the 91, 182, and 364-day maturities. About 156 billion was allotted across the three tenors from a subscription of just under 400 billion. We witnessed rates on the 91 and 182. They remained stable at 2.5 and 3.5% respectively, while we witnessed an 85 basis point drop on the 1 year from about 8.2% to 7.35%. So immediately following the auction, we started to see bids that were unsuccessful at that auction filter into the secondary market. So that bullish trend intensified as well, and we saw bids about 50 basis points lower than where they closed on the 1 year. So closing the week today, we've still seen that bullish trend persist, and we've seen rates trend further down to about 6.5, 6.6 levels on the new 1 year, which is 11 August 2022.
Okay, what about the bond market? Talk to us about the yield curve, where we saw the most action, where we've seen the most action so far this week.
Oh yeah, so there's a bond auction scheduled to hold next week on Wednesday on the 18th. So what we saw this week is that we've seen some interest on those on the run bonds. So we expect the DMO to offer the 2028, the 2036, and the 2050 maturities. So what we saw this week was a bit of a bullish interest on the 50s. So yesterday we had seen the bid drop to below the 13% handle, just by about two basis points, so about 12.98. But today we've seen a retracement, so we've seen bids just above 13%. So we expect some buying pressure, but it has been mostly quiet. So leading up to that auction, we expect the trend to be, the prevailing trend to be quiet.
Now, Senator, if I could just comment, this 13%, is this some kind of a resistance level for investors?
I guess you could say that. So we've seen that the secondary market rates could be an indication of where it could close at the auction. So at the last auction, for example, the 2050 closed at 13.25. So we've seen it trade about 25 basis points lower than that. So it could be an indication of where the rates could come in at the auction. Okay,
we have just 1 minute left. Let's quickly talk about the FX market. We've seen the NAFEX rates are stable at around 411, and the INE window somewhere around 420. Correct me if I'm wrong, but how would you describe trading at the FX and all that sentiment around the Naira? Would you say that the dust has finally settled?
Definitely. So, I mean, following the announcement by the CBN in July 27th about sales to BDCs being suspended. So we've seen an increased intervention by the CBN in the official markets. So we've seen that increased demand kind of moderate the volatility in rates we had seen. So definitely we would expect rates to continue to hover around these levels. So as you rightly said, the FX rate is currently at about just above 411 Naira per dollar. So we expect it to hover around these levels in the mid to near term.